All right, Ross, before we talk a little bit about strategy, let's talk what I think is still most prevalent to all traders, and that is finding out what your risk tolerance is in this game. Some people are set up for more high-frequency trading, and some require wider moves, smaller size, and that's more of my game. I don't have the mental stamina to high-frequency trade, and I think that comes down to, in any trading, you're going to take losses. And if I can win 60, 70% of the time, I will make money, and really, if I'm small, I can even win 30% of the time and make money. So, I think the question comes down, Ross, is if you're going to trade often, what is your risk tolerance? Or if you're going to trade less often, maybe you're a little bit wider, but knowing that you're going to have fewer trades and maybe wider opportunities. So this is a long-winded way of asking, how does one come to a comfort zone of dealing with the risk associated with their individual trading allocation?
First, it's usually standard. We say you don't risk more than 2% of your account on one trade. Max 5%. That especially in the beginning,
right.
Say this is your first account, 2%. That gives you a lot of losing trades in a row before you blow out an account.
Right. And so let's give some perspective there, because I agree with this, by the way. I'm more of a 5%, but I'm been at the game a little bit longer, so I kind of know that I'm not going to lose, 5 times in a row even. But the new trader doesn't know this, so 2% might be the better number. 2% on a $25,000 futures account is $500, or a 10-point move on a one lot. That's pretty wide. That gives you some nice room to maneuver in, I think.
Yeah, that gives you some serious margin for error. That's what I would say.
Yeah.
If the market's gotten away from you for 10 handles, you better be stuck in the bathroom, or you didn't know you had the position on, depending on what your style is,
Right.
So I would say initially risk has got to be a function of the volatility in your market. What are you trading? If you're trading, say I'm trading the Dow right now, I know that the ATR for the regular trading hours is about 85 points right now.
Right.
So I'm going to say that I'm going to risk max 20% of the ATR. Then I know that the max stop on my trades is 17 ticks.
Yeah.
Okay. And if it got away from me for that much, it got away.
Right.
But that's part of controlling the risk.
Right. So you use an average true range, and as you said on the Dow right now, 85 points, and you take a percentage of that. That's how you define it, and that works for you. You could, if you did the same thing, Ross, but again, the range on the ES right now today was 10 points. So, using that same extrapolation, you're talking a 2.5 point risk. So, pretty quickly if you're going to be wrong. And that's fine. And I think you're absolutely right. You just have to be consistent with that discipline. And it all comes down to discipline. You can't style drift and say, okay, I think it's also
swing trade this one.
Right.
This one's going to be a swing.
Right.
No, that's how you.
If you start as a swing trade, that's fine. Believe me, you can say, hey, I'm going to risk 10 points, period. And if that's overnight, or if it doesn't close over this level, I'm staying in the trade, because that's that trade. But if it's a day trade and you're being honest with yourself, define it, folks. Put it out there that, as Ross said, whether it's some percentage of an average true range, and you can get that, it's pretty public information on any vehicle you're trading, stay within it. That way there's we're outside of a standard deviation if it's moving beyond that. And like you said, I'm wrong at that point anyways. If I'm, selling into strength or buying dips and it still keeps going the other way against me, get out quickly. You can always get back in the trade. You can always get back into it.
Especially in futures. Especially in the liquid contracts,
Yeah.
You could flip them all day.
So define what your limit is. If it's a day trade, define what your limit is on a swing trade, and be persistent and stick with it. I think those are great points when you're defining what risk tolerance is to you as an individual trader.